All right, thank you so much. Today I'm going to talk about how to set up trades knowing the trend and condition of the market. And really, it is absolutely key to know the trend and condition of the market before you go and trade. I can't say that enough. It is critical because if the trend is down, you're going to have a lot of trouble with your trades. And you really need to know the condition of the market because maybe the trend is down, but we're starting to see some information under the hood that would imply that the market will be moving up or will be moving down in spite of the trend. So you need to know both. I'm going to concentrate mostly on the condition of the market today. I'm going to talk about all the different indicators that I like to use. And then to finish it up, I'm going to walk you through our decision point alert daily report. You'll get to see what we're thinking about the market currently. So I'll put all of these concepts together by showing you how we review the trend and condition of the market inside of our decision point alert. So let's get started here. About me a little bit, my education, I have a bachelor's of mathematics from the University of Southern California and a master's of science in information resource management that I got at the Air Force Institute of Technology. I was in the Air Force for 8 years and had the lovely opportunity to go to the Air Force Institute of Technology and get that master's degree. It was really it was a great time in the Air Force, I have to say. I've been studying the markets. It says over 25 years, but based on these slides, I think it's closer to 29 years. This is a presentation I pull out often, and I just haven't updated this, unfortunately. But yes, I have almost 30 years of studying the markets. I've actually been looking at the market since I was in high school. My father, Carl Swenlin, came up with Decision Point, and he taught me pretty much most and everything that he could think of that he knows. And it really set me up to understand the market at a very early age. And so by studying the trend and condition of the market over all of these years, I've found that it is absolutely critical before I trade to know the trend and condition of the market. I am at decisionpoint.com. I am the vice president and senior technical analyst there. My father is the president and chief market analyst there. Stockcharts.com, you'll find me there. I do a blog. I'm a consulting senior technical analyst. I've been doing that for 14 years. The Decision Point blog is on stockcharts.com. It is a free blog, so you can go to StockCharts and you can subscribe to our blog there, or you can get on our free email list, and that's the best way to get all the information from decisionpoint.com. I'll show you how to do that in just a little while. And then I host a free Decision Point trading room on YouTube. It actually runs on Zoom in the morning, and then I post it to YouTube on our channel. So you might want to give a look for us on YouTube. It's underscore, actually it's not underscore, it's just at DP Alert. DP Alert is our YouTube channel. And again, all the information there is free, and you'll find some workshops that I've done there and some alerts that we do along the way. So we need to know the trend and condition. This is about all I'm going to talk about the trend, because I think most people can identify a trend in the market. It is either up or it is down. I would say that yes, the market can trade sideways, but ultimately you're going to still find some sort of trend within the market that you can study and follow. Top above a top, a low above a low is an uptrend, and a top below a top and a low below a low is a downtrend. So that gives you kind of the basics of how to find the trend. But again, it's kind of a visual thing. Generally, you're going to be able to figure it out, but this is the information you can use when maybe the market's trading sideways and you're not quite sure which way the trend is going. You can use this particular example. The condition of the market, that's where things get a little more complex. I won't say complicated, but just complex. It's all very understandable, and I'm going to explain all of these market indicators briefly before I go into our DP alert publication. We have various market indicators. I'll talk about those in a little bit. We have the price momentum oscillator. This is our momentum tool. It's very much like the MACD, but it is calculated differently. It acts very much the same as the MACD, but you need to know the momentum. That obviously gives you an idea of the condition of the market. And then one that I use regularly is the RSI. The RSI tells you whether a stock or an index is overbought or oversold. It's a great visual. It gives you that sense of whether the index or stock is ready for a rest because it's overbought, or is it ready for a nice move upward because it's oversold. So the RSI is very helpful. You'll find that in a downtrend, it's going to nearly always be negative, below net neutral 50. If you're in an uptrend, it typically is going to be above net neutral 50, but we'll look at that a little more closely when we get to the charts. The market indicators that we have are plentiful. We have our favorite one, which is the golden and silver cross indexes. I've done various presentations on the golden and silver cross indexes. I'll talk about those today as well. We have price above the 20, 50, and 200-day EMAs. This is kind of the components to the golden and silver cross indexes. We have what we call climax indicators, which I'll be going through. We look at up-down volume and down-up volume on the SPY and on the New York Stock Exchange, and then net advances declines and net advance decline volume. So all of those go into our climax indicator chart. We have the Swenlin trading oscillators. These my father came up with. And you can tell a lot about what's going on in the market based on what direction they are traveling. We also have intermediate term breadth and momentum. You may know them as the ITBM and the ITVM. And those are great for the intermediate term. Their direction helps us a great deal, and their location. So let's go ahead and dive into the golden and silver cross indexes. And again, this is our favorite indicators that we've come up with. These are rather new to us. I think that we've brought them to the table about 4 years ago, maybe 3-4 years ago. Carl came up with the idea, and it's a brilliant one. So most of you are familiar with a golden cross, which is the 50-day EMA being above the 200-day EMA. We came up with something called a silver cross, and that is a 20-day EMA above the 50-day EMA. So you have a golden cross and you have a silver cross, and I think these are pretty self-explanatory. And what we do is we tally up the percent of stocks that are on golden and silver crosses. So it gives us an idea of not only the internals of the market, but the participation goes into this, and you get even more insight. So that's the basics of the golden cross and the silver cross index. The market bias is where we determine, based on the golden and silver cross, what that bias is. So let's just say if you have a golden cross, you've got on a stock or an index. If you have a golden cross, you have a bull market configuration on your chart. So you are more than likely going to see more up moves and upswings there. If you have a silver cross on your chart, we say that you have a bullish market bias. So this is why the golden and silver cross are so important, because we can determine the bias of the index as a whole just by looking at the silver and golden cross indexes. So we take and we look at the price above the 20, 50, and 200-day EMAs. These kind of determine the boundaries of the silver cross and golden cross, because you can't have a bunch of golden crosses. You can't have 100% of golden crosses and have only 50% have their price above the 200-day EMA. That's just not going to happen, because in order to have a golden cross, you need to have price above both the 50 and the 200-day EMAs. And with the silver cross, same idea. You are going to compare the amount of stocks above their 20 and 50-day EMAs to the silver cross index, and that'll help give you some bias there as well. So we compare the silver and golden cross indexes. We compare those price above 20, 50, and 200, which I just explained. If participation is lower, then you have a bearish bias. If participation is higher, well, it says is higher, then you have a bullish bias. So we make that comparison with, again, how many stocks are above their 20, 50, and 200-day EMAs. Here is the golden and silver cross index. This is the silver cross right here. This chart is from May of 2022, just so you know. And you can see the silver cross has been falling here along with price. You have the reading itself is only 30.2%. The golden cross index, remember, we're tallying up how many stocks have a golden cross. In this case, only 46.4% have golden crosses. Both of these readings are below our bullish 50% threshold, so you know that the market condition is bearish at this point. Here are the stocks above their 20, 50, and 200-day EMAs. Notice that these percentages are lower than the silver cross index and the golden cross index. That tells us that the golden and silver cross indexes are likely to continue moving lower, because again, you have to have price above the 20 and 50-day EMAs to get a silver cross, and you need it over the 50-day EMA to preserve a silver cross. So when you have less stocks below or above their 50-day EMA, then you know that the golden cross, which is higher, is going to continue lower. And similarly with the golden cross index, you have the same idea where we compare the amount of stocks above their 200-day EMA. This is lower than the golden cross index, so it's you're not going to be able to continue to see the golden cross index move higher, because there are less stocks above their 50 and 200-day EMAs. And again, price needs to be above those in order to have a golden cross or to maintain a golden cross. The climax indicators, as I was talking about, we look at net advances, declines. We look at new highs, new lows. We cover the volatility index. We look at total volume for the trading of the day. That's a really important one that people often don't pay attention to. But if you get total volume really moving high, have a really high amount of total volume, that tells you that there's a lot of thrust behind whatever move that you're looking at. But we also have to be careful if you have a rally and you have extremely high total volume. it usually is a blow off. So you have to, it's kind of a bull trap. So we have to pay attention to total volume. And then we look at those volume ratios. Here's our climax chart. It is a little bit busy here, but that's kind of how it works. What we do here are the net advanced declines, net advanced decline volume at the top. There's your VIX. This is your total volume on the S&P. And then here are those ratios, the up-down volume ratio for the New York Stock Exchange and the S&P, and then the down-up volume ratios. So what we're looking for is when these ratios move above 3. So you can see we had a climactic reading on the S&P that particular day. And we also have thresholds for net advances declines. And you can see that in this case, we went above that threshold, or below that threshold, I guess you would say. So we ended up with 2 climax readings out of the 4 that we follow. And that gave us a climax. We looked at where we were in the decline. We were in a declining trend before this climax happened. So we would say that this climax was a downside exhaustion climax. So we should start to expect the price to start moving up. We did end up with a lower price point the next day, but notice it was on a hollow red candlestick. That is a bullish candlestick, and usually you're going to see a reversal off of that. You can see some of these other climaxes we had. This is not typical of what we usually see. And again, you're going to see that when we go through the DP alert report. The Swenlin trading oscillators, again, what we're doing is we're following whether they're rising or falling. These are all available. All these indicators are all available on stockcharts.com. I can't speak to Thinkorswim. I do know that the price momentum oscillator is over there. But as far as the Swenlin trading oscillators, I don't think that they are there. I'm pretty sure you can only find those on stockcharts.com. So here are the Swenlin trading oscillators. And then the other thing that we look at in this case, in the short term, is the percent of stocks above their 20-day EMA. So we looked at that earlier, but this is a really good indication short term as to the strength of the internals in the market. And as you can see at this point, it is oversold, which is a good idea, a good thing. And we do have oversold readings on the Swenlin trading oscillators here, but they are moving down. So the condition is still negative, but we do have oversold conditions. So even though we're in a big decline here, we're starting to see these oversold conditions, and that is usually a sign that you're going to get an upside reversal. These are the intermediate term breadth momentum and volume momentum oscillators. And as you can see, it looks very similar to the Swenlin trading oscillators, only our chart has a bigger time frame, a longer time frame. And again, we're looking to see what direction these are going. So back here, you can see we got very oversold readings, and that coincided with a market bottom. Back here, we had very overbought readings. We also had a negative divergence where you had a higher high over here, lower high over here. So you had a declining trend. That's a negative divergence with price, which was rising. So that was a sign that there were some problems. And again, things had gotten very overbought. We had another setup here of a negative divergence. We had a negative divergence down here. And all of this told us to expect a decline. It turned out to be quite a decline. It doesn't tell you how much of a decline you're going to get, but it does give you an idea of what to look for. This is the percent of PMO crossover buy signals. So we look at the percentage to, again, determine the condition of the market. And we do have oversold readings back here. you can see that typically when we do get those oversold readings, you're going to get a bit of a move to the upside. That's what you're looking for. There's that little bump to the upside that we got there. So again, the condition, looking at overbought, oversold. Back here, we had oversold readings, and you can see that led to a move upward. So let's go to a live example. Let's talk our way through the decision point alert. All right, give me a moment here to make sure that I can share the right screen. It looks like it is showing the main screen, but I want to just get that one. There we go. That's better. And I apologize, I can't really get the screen any bigger than this. I have a curved monitor and it just doesn't share the screen to the, is not optimal. So I apologize, some of these charts and things are going to be lower. This is our website, decisionpoint.com. And we do have two products here, the Decision Point Alert, which is what I'm getting ready to walk through with you, and Decision Point Diamonds. So Decision Point Alert is where we talk about the trend and condition of the market. This report is critical. And it, again, you need to know the trend and condition of the market, or your trades are just not going to be easy to find. They're probably not going to produce. So it's very important to know what's going on in the market. And that's what the DP alert does for you. The Decision Point Diamonds, I find 10 stock and ETF picks per week. And that's a great way for you to find some good stocks already screened for you. And then I will say that we also have what we just came up with a little while ago, the Decision Point Scan Alert System. And this basically takes all of my exclusive Decision Point scans and gives you all of the results from those scans in your email box every day. So you're getting, it's not diamonds. Diamonds, I go through these lists and find the best candidates. But if you want to go through the list and find your own candidates because you have a different analysis process than I do, this is a way to get a really good group of stocks in front of your face before you go ahead and invest. So if you need stock ideas, this is where you're going to get it, in the Scan Alert system. Our homepage is where I'm directing you right now. We do have a little video. It tells you a little bit more about us. This is where you can subscribe to our free newsletter. I would encourage you to do so. I don't send out things all the time. I'm not going to inundate you with lots of commercials or any of that. It gives you all of our free articles when they get published. And it also gives you these opportunities like you had today to come in and see some free trading presentations. So this is where you want to go to sign up for that. Then I have my free Decision Point trading room. I talked to you about this a little bit earlier, and that is on Mondays at noon Eastern. You can register to go see us live. But as I said, we also have our YouTube channel. Let me see if it comes up properly here. And there you have our video that tells you about our channel. But this is where you're going to find our DP workshops, and there are our trading rooms. And if you click on them, that'll just get you right there. Or, yeah, it'll get you to the list of all the trading rooms. So this is a great way to get more information about the market for free. All right, but we want to go in and start looking at the Decision Point Alert. So we're going to go to our blogs and links page. And I did want to say, I'm going to talk about it really briefly here, but I do have a free 2-week trial, so you can try out any or all of our products. and you can try them out for 2 weeks before you get charged. If you cancel, you can cancel anytime during that 2 weeks. You're still going to get the 2 weeks. So don't feel like you're going to get charged right away. If you want to go ahead and go in and cancel right after you subscribe, you can actually do that, and you'll still get your 2 weeks, and you won't have to worry about getting charged. I set that up on purpose. I don't like these revolving subscriptions when I go in for a trial and they don't give me any notice, and I don't like to get stuck with a charge when I don't want to get a charge. All right, so this is our blogs and links page. We have our chart lists over here. So if you want, you can go to the chart lists. Let me sign in here. And all of the charts I'm getting ready to show you are included. And so you can go in and look at these charts yourself and get the information. You can look at our under the hood chart list. This is where we have all of our charts with those under the hood indicators, the silver and golden cross, the percent of stocks above their 20, 50, and 200-day EMAs. I also follow stochastics. I didn't talk about that really. And then this is the SPY versus the QQQ. On the others, the other under the hood, we have them under the hoods for all of the indexes, all of the sectors, and about 6 industry groups that include gold miners and biotechs. All right, regional banks are also in there. But there you go, there's your under the hood, and the relative strength then becomes the index or sector versus the SPY, so you can get a sense of what's happening. Right now you can see relative strength-wise, the S&P 400 is pretty much traveling in line with the SPY at this point. All right, let's go ahead and get into the decision point alert. So here's our most recent. There's your diamonds, where I give out those stock picks. Actually, I can show you one of those. If you want to write down my choices for yesterday, feel free. I always give out I give out 4 on Tuesday, 3 ETFs on Wednesday, and 3 stocks reader requests on Thursday. So this was Tuesday's picks. I had a short in here because I'm still not convinced this market's finished with its decline. And then I had 3 longs that I came up with, and they were in utilities and consumer staples, because again, I'm still a little bit tentative about the current market rally that we're seeing right now. And then what I do is I list runner-ups so that you actually end up getting more stocks than the 10 per week. So it's very useful. But basically, there's our free trading room. So I give you the company name and what they do, when their earnings are. Stock charts runs predefined scans. I let you know which of those scans triggered that day. We talk about what it's doing in after hours trading. And then I give you the daily chart with my description. And then I always go through the weekly chart as well. So as you can see with Chemours, I'm probably pronouncing it wrong, but Chemours, you can see that on the weekly chart, we have this big rounded top. We don't have any support left. This is a perfect setup for a short, in my opinion. All right, let's get back to the DP alert. All right. So we do our signals right up off the top. And again, we're always looking for silver crosses and golden crosses. And in this case, we had the golden cross on crude oil. We had tech with also a death cross here. So that was a problem. And you can see we've lost support on technology, so that is another issue, although we could kind of call it support down here at this low. So this isn't just coming out of nowhere. And we can see under the hood on technology, we always show those under the hood charts. You can see that right now the Silver Cross Index is very, very low, and the Golden Cross Index is below our 50% bullish threshold. And then look at the participation under the hood here right now. We have very few stocks above their 20, 50, and 200-day EMAs. This was as of yesterday evening. And that tells me that these two could continue to move even lower than where they are now. And I mean, the good thing is they are, at least the Silver Cross Index has gotten oversold. So that tells us, you know, these participation readings are also oversold. So we could be looking at a bounce coming up here. And in terms of the trend, currently we have a declining trend. The trend is down. Here's a lower high, and there is a lower low. So that sets up a declining trend. So right now in the market, in the short term, we have the trend is down. Look at technology on a weekly chart. We have lost the rising trend. There is no real good support until we get down to 190. That's honestly where we're looking for technology to go if this bounce does not turn into something, which we're thinking it might not. And I'll talk to you about that in a little bit. You can see that we have our market scoreboard. This tells you right here, tells you whether the index is on a silver cross or a dark cross is the opposite, or whether it's on a golden cross or a death cross. And as you can see currently, a lot of neutral signals. That means that we had a dark cross of the 20 and 50-day EMAs where it was a negative crossover, and that occurred above the 200-day EMA. So rather than go into a sell, we went in sort of a soft sell or hedge position on those. You get a full accounting of what happened. So yesterday wasn't all that impressed with the follow through we got off of this really nice rally. We kind of were up and down, and but ultimately we did hold the rising trend, which was good. And there's our 10-minute PMO, which had already given us a buy signal. Right now, what we're looking at on the SPY, we got down to correction territory, which is 10% plus decline, but we are reversing now, and it looks pretty good with today's rally. The one thing I have to say when I look at this, and this is one reason I'm a little bit, this rally is suspect to me, is we have a textbook reverse flag formation. And I'm looking at the decline that we just got out, that it confirmed that flag, and that implies that you're going to get a down move the height of the pattern, and that would put price way down here at about 490. Now, I'm not saying that that's where we're going to go, but it's certainly something that we have to be aware of. Here are new highs and new lows. I like to look and see whether they've been contracting or expanding, depending on what's going on. And this indicator is the 10-day moving average of the high-low differential. So the number of highs minus the number of lows, and you take a 10-day moving average of that. Currently, it did just turn up, which is good, but ultimately it's still in a low reading, and the declining trend on this is confirming the declining trend in the market. You can see that our climax chart, we haven't had a climax reading this last week. This happened, I guess, early last week. And here you go, there's the net advanced declines went over the mark, and we had net advanced decline volume went over the mark. We had both up-down volume ratios for the SPY and New York Stock Exchange above the readings that are thresholds. And this came at the top of a rising trend. And to us, it spelled a upside exhaustion climax. So we were expecting lower prices from here. We ended up getting that. Here are our Swenlin trading oscillators. And currently the Swenlin trading oscillator for breadth is rising. It's not rising just yet for the STOV. I mean, yeah, the STOV. So the readings are mixed. So that's part of the reason I have trepidation about this market, because I don't have full confirmation from my Swenlin trading oscillators. You can see that participation currently is below our 50% bullish threshold, but we do have 64% of stocks with rising momentum or rising PMOs. So that's not a bad foundation to continue to get higher prices from here. Here's the ITBM and ITVM, and you can see that in this case, the ITBM is rising, but the ITVM is in decline. So again, we have mixed indicators here. We're not getting a full confirmation of the current rising trend, because the market trend is up in the intermediate term. We have a low above a low, we have highs above highs. We're still, I would say, in a rising trend in the intermediate term. You can see that we have 58% with PMO crossover buy signals, and that's quite positive. Here's the bias chart. And the Silver Cross Index for the SPY has had what we call a bullish shift above the signal line. So that has set up a bullish bias in the intermediate term for the SPY. But I would say that the reading itself is only 38%, so it's still not a very healthy reading, but certainly we are getting this turn, and that particular bullish shift does suggest we could end up seeing higher prices from here. The percent of stocks above their 20, 50, and 200-day EMAs are all below our 50% bullish threshold, really not going anywhere fast. This is a problem for the market. These are mediocre readings, and we need to start seeing that participation moving higher, and at this point, it's moving lower. This is the bias assessment table. This tells you what the bias is on the other indexes and sectors. And basically, we're comparing the Silver Cross Index to its signal line. If it's above the signal line, you have a bullish bias. If it's below, you have a bearish bias. And then we have the Golden Cross long-term bias. And that is the Golden Cross Index being, in this case, below its moving average or signal line. And with the bull ones, that means the Golden Cross Index is above its signal line. And this gives us a really good picture of what the short-term conditions are. And you can see that we do have a lot of bullish readings here. And I'll tell you that a couple days ago, it was very bearish. So we are seeing the kind of changes we want here. So that is the trend and condition of the market that you need to know. The DP alert also includes Bitcoin, interest rates, the yield. We look at bonds. We look at the dollar, look at gold, gold miners, and crude oil. So with the DP alert, you get all of those. So hopefully you found this very interesting and helpful. Let me see if I can go back and get the presentation working again. No. I'm having trouble sharing. I'm just not going to share it. We'll just stick with where we're at here. I'll stop showing my screen. All right, so I hope you enjoyed the presentation. And again, you can get a free 2-week trial just using coupon code DP trial and the number 2, DP trial and the number 2. I know that that's going to be going into the chat or the Q&A area. I'm not sure which, but you can find that there. And we hopefully will see you on board with the DP alert so you can learn the trend and condition of the market every market day.